Mr. Joseph Chee, the executive chairman of Solana Company and also the founder of Pantera Capital.
I mean, Solana is a clear winner if you look at some of the operational metrics. That is the cheapest, most scalable, and then most user-friendly. This year, it's probably the most profitable public chain. If you look at all the active users in terms of the number of new developers joining the chain, and Solana is ranked number one. High-performing blockchain like Solana. What you need to do is put it on paper, compare them to the rest of our ones. Then it becomes the easy step. Highly likely, we should become the best DAT for Solana. This is the institutional grade DAT to provide access to Solana with ETF, all different ETFs being approved globally as we speak for Solana. I think you're going to see a fast increase in institutional ownership of Solana. I mean, the reason we choose Solana is because there's a lot of hidden benefit.
Welcome to 16AX, a show that bridges East and West, exploring the future and the nature of the wealth. I'm your host, Mr. Z. Today, our guest is Mr. Joseph Chee, the executive chairman of Solana Company and also the founder of Pantera Capital. So Joseph is a legendary in both the traditional finance and Web3 industry. He was not only a heavyweight in UBS investment banking, APAC, but also the founder of Pantera Capital. And today he serves as the executive chairman of Solana Company, viewing Web3 as a long-term game to be played with conviction and patience. From raising billions of dollars for companies, leading multiple mega deals, including deals such as Hong Kong Telecom, MTR Corporation, and Bank of China, Hong Kong, to now building one of its kind crypto digital asset treasury. So Joe's story is not just one of transformation, but a cross-era experiment in capital evolution. Welcome to our show, Joe.
Mr. Z, that's a great name. I'm pretty sure that's not your real name, but
yeah,
I guess it's a good name to have.
Cool.
Thank you for the invitation. Happy to be on 168X. It's a great brand for this platform. And thank you for all the compliments. I'm not sure I deserve all of it, but very happy to be here.
Of course, you deserve all of it. It's our honor to have you on our show. Joe, your financial career is actually very legendary. So let's start from the beginning. Could you walk us through the whole journey? What drew you into the capital markets and what drew you to crypto and now Solana?
I had a great career, and I can't attribute that all to myself. I think at the end of the day, I keep telling people that was one of the luckiest Malaysian in the greater China capital markets. Right? I guess obviously I started my career in Hong Kong and China, eventually took over the whole investment banking business in Asia for UBS before I quit and started Pantera Capital in 2017. To be honest, growing up in Malaysia, I have no idea what investment banking was. And all we saw was Citibank and CIMBs and Maybank, normal commercial bank. And only when I was in school for my MBA in NYU, I ran into a whole bunch of investment bankers, and some of which were my friends that I know for a long time, and they went to different schools, all ended up in New York working there, and then realized that there's a career called investment banking. There's a place called Wall Street, and then there's a place where you have a lot of smart young people working very hard, working on great transactions, and then working with some of the smartest people in the world, right? And obviously at that point in time was engineer, and you look at the kind of financial rewards working on Wall Street is great as well, and it was very hard to get into, and I had no financial background before I started MBA. I actually had a marketing major. Only after I met some of my friends and classmates, I realized that probably switched over to Wall Street. And to be honest, my character is more suitable. I've been searching for a career. I think I switched my area of focus for 5 times before I found investment banking. I was this person that had too much energy, don't really want to stop. I just keep thinking about getting things done. When I had my first job with a US company called Becton Dickinson, I started 2 companies doing 2 different businesses on the side. And I was so bored that I had to go and take an MBA class part-time, since at the time was the company's paying for everything. So that has helped. And NYU was the best part-time program I could find at the time. So I started, and then I switched my career afterwards. And I have to say, a lot of things that happened, is an important milestone in my life, has a lot to do with luck. And sometimes we would attribute to me making the right choices at the right point in time. But I think luck is, I'm not sure how big a part that is, but I think a significant part of it. Because when I wanted to go into investment banking, someone with my background, it was very hard for me. I think it would have been very hard for me to find a job on Wall Street. Right? Because if on a fully competitive basis, most of the people that went to Wall Street, either they have gone to the right schools in finance, and then had some internship, and then work before the MBA in some major financial institutions, and then you've gone to the right schools and graduated with very high grades from the top business schools, and then you have to fight with thousands of people, even all the graduates from same schools and all the top business schools to get into those few jobs that are being offered by the major bulge bracket banks. Lucky for me, at the time there was a peak of the internet bubble. Some of the smallest people, they would have taken the job I was offered and went off to start internet companies. And less competition, so I joined Citigroup / Solly and started a career in investment banking. That was the time when you see all the major tobacco companies like Philip Morris, RTR, BAT, they were approaching bankruptcy because they were sued by the people, and they lost a lawsuit. They have a lot of money to have to pay to the courts, and for these people who either family members of a lot of people who got caught cancer from smoking, and also some of the patients obviously at the time. So I helped them raise a lot of capital, and then did quite a few major transactions. I was in New York due to various reasons. So it's a long story. I ended up coming back to Hong Kong, and a lot of my friends. One of the main reasons, a lot of my friends were in New York, all sort of moving towards Hong Kong, and most of the Asian that were Mandarin speaking were asked by the existing bank to say, "Hey, would you consider going back to Hong Kong because China's waking up? This whole giant, market is, coming to life, right? And then major privatizations happening, right? And then consumption is coming up, and then they welcome a lot of foreign investments, and the Western capital around the world all targeting China. There'll be a lot of major transactions, and since you are Asian, you're American-born Chinese, you speak some Mandarin or whatsoever, you're all going that way, right? And then you're like, hey, Hong Kong is fun. Why not? So I came
really
back to
fun.
Hong Kong. I was young, and I was free to travel, and I was thinking about coming back to Hong Kong for forever. I was thinking maybe just go to Hong Kong for a few years, do some major deal, have some fun, and then I'll probably head home. And I ended up being here for the last 26 years, right? And approaching 26 years. And obviously, the last 26 years, I spent half my time in Beijing, half my time here. And again, I was at the right place at the right time again. Even though I started Hong Kong, and UBS was, at the year that when I joined, and somehow won a lot of major mandates, right? Some of those you mentioned, and also I guess somehow when I joined Taiwan, we had the best year ever in Taiwan. I can't say that's me. I was still a relatively junior person. I worked very hard with guidance of different senior bankers, and then I guess I built a name for myself within UBS as well. As I was doing quite well, and then I wanted to join China to run China ECM. And after this multiple pleadings, and they said, okay, fine, go over. And as I started my career in China at the right time as well. 03, 04 is when you see, some of the major privatizations already happened, like China Mobile, PetroChina, Sinopac, China Telecom, Bank China Hong Kong has already started. When the rest just coming 03, 04, 05. The banks, the shipping companies, and then major infra company, different local state-owned enterprises across different parts of China. There's a lot of business, exciting, and everyone I spoke to was full of optimism. They have so much energy. Everyone wants to go and win business, get it done, make money for themselves and for all the partners. And I never said, to be honest, when I was in New York, I thought the bankers in Wall Street were the hardest, smartest bunch of people I know or I ever know. And after I came back to Asia, and when you see the energy that the bankers and corporates, the young people, and even the older generation people who were older than me, and then see how they work and how disciplined they were, how much they care about the clients, how innovative and problem solving they were, and you're like, hey, this is the place to stay. And I decided to stay behind and build a career here, and it was the right decision. And I went through the time when everything's going through explosive growth. I was in Shenzhen yesterday, and I was speaking next to a vice president from Fosun Group, who is now heavily into blockchain and crypto as well, which is a bit surprised to me because Fosun is a bit traditional, is a fairly traditional kind of conglomerate. And I was telling a story on the stage, like 02, 03, when I met the bunch of founders from Fosun, and they have some land, pharmacy, there's some businesses. To be honest, at that point in time, you're like, can you list these guys? Not really. It was very hard, very, very hard to finance the operation because they have bits and pieces of everything. Mm-hmm. But by 07, it was one of the most successful IPO. That was 4 or 5 years later. We raised $1.6 billion for them. We increased the top end, the share price of IPO, I think once or twice, I forgot, right? Priced it at the top end, the revised, high end, and it still went up afterwards, right? And then it was called like the Hutchison Whampoa of Shanghai, right? And it was over a period of 5 years. Mm-hmm. Right? And you would not have seen that in Malaysia. I think it's almost impossible to even see that in the US.
Once in a lifetime.
Once in a lifetime. And there were times of doing 7 IPOs in 1 week. You thought that's normal. And then there were a period of time where like you come over to me and look, it's like you figure out the kind of fee you're gonna pay me. It's like $10 million. You're like, too small. Why don't you talk to that guy? He'll take care of you, right? And then there were IPOs that make, most of the IPOs we did make tens of millions of dollars. There was in one IPO we made $120 million in one deal, and there were major financing transactions, share back, acquisition financing, that in the billions. And then we made day in and day out hundreds of millions of fees out of this kind of transaction year after year. And that was the most profitable era for investment banks in Asia, and especially for UBS as well at the time. But again, using the Chinese word, 身在福中不知福. You didn't know it was once a lifetime. You thought it was normal. It's just keep going. And then it went on for almost 10 years.
Amazing.
It's amazing. But I guess towards the tail end of my career, and I could see that banking is, has changed. It's different. It was different starting like 1 through 1 4. I think the sort of the wave started in 2008, and regulators, senior management of major investment banks and financial institutions, they're all moving from 08 to, I would say, 98 to 08. It was a period of globalization, deregulations. Everything's opening up, and everyone's a big family, this global village. Mm-hmm. Right? And then everyone's keen to meet each other and do business together from all locations, right? And welcome, like everyone to come in and join us and do everything together. But I guess from 08 onwards, you could see that sort of tone has changed. It's going like, okay, it's supervision, and supervision, compliant, and compliant. And the focus has been do not make mistakes.
Compliance driven.
And then they're asking all the young people to stay in that spot, do exactly what you asked to do. You don't do more because you don't know what you're doing. You might fuck up, and if you screw up, then there are repercussions for me and for the company, right?
Mhm.
So the environment in investment banking is very different from when I entered Wall Street in 1998, 97. But back then, the spirit is like, now you're with us. We are one of the few groups of people, elite group,
Mhm.
have the knowledge, right, the intelligence, and the capital and the network to move heaven and earth, right? You're supposed to come here and do, miracles, right? And then that whole thesis has changed. Now you come here, you're here to work, and do not make mistakes. Do exactly what you're told. So I think at the time he's thinking, okay, what should I be doing going forward? And then to be honest, after I've seen all these major companies, major entrepreneurs in my life, some of them are still very good friends today because I actually helped them along the way. And then you're like, okay, maybe I want to go and build my own business. But there's one thing I know about myself. After being in investment banking for a long time, because of all the heavy training, in a way, you train yourself to become not
Different mindset.
different mindset. It's just you're so risk adverse that it's so difficult for you to turn from investment banker and into an entrepreneur immediately,
Mhm.
right? Because the first instinct you have is to try to limit all the risk in front of you. Yeah, and then you're trying to make money based on no risk. And I think as an entrepreneur, sometimes risk is not the first thing you think about. You're thinking about where you want to go to, kind of business you want to build. How do I get there? How do I get around the risk? How do I mitigate risk to a certain extent? But I help you to take it. You have to. And that part's very hard for investment bankers. So I think going to the buy side, building a fund management company to get a few friends, and then start investing in corporate, some of which we control. Some of these businesses that we have, I guess, simplicity, we fell in love with, we spend more time with, right? And then you sort of get more into how to run corporates and how to sort of look at risks, manage them, take them when you have to, right? And then sometimes there's some repercussion and how to deal with some of the repercussions, right? And that's sort of like you're getting close to becoming an entrepreneur. I think after a few years of doing that, now I think I'm ready. I want to move on to the next stage and hey, let's go and run a business.
Going like all the way from sell side to buy side to now being an entrepreneur yourself and being
Right.
the executive chairman of Solana company.
Correct. So
And-
that's sort of like something I wanted to do from 8-10 years ago. Finally,
Finally, among so many blockchain, why did you choose Solana? I mean, as a capital allocator, like what did you see in Solana?
I mean, Solana is a clear winner if you look at some of the operational metrics.
Mhm.
Right, is the cheapest, most scalable, and then most user friendly. And then at the moment, you could probably say that for this year, it's probably the most profitable public chain. If you look at all the active users in terms of the number of new developers joining the chain, and Solana is ranked number one. Because I think doing DAT, they're different business models, right? I think I could have done it. I could have gone and run a bank and do something else, but I choose to become chairman of a DAT and of Solana especially because I think this is actually a relatively easy job, right? Because the underlying the asset, right, Solana itself is taken care of by all the ecosystem partners within on this chain, and also it's run very well by Solana Foundation. And the big part of the work's already done. I just explained it.
Mhm.
Right? I just got to put it down on a piece of paper and explain it to people that are actually buying the Solana company stocks that this is the underlying. It's the most performant blockchain you can find today. Right? So I think that's a very simple decision for me.
So then, could you walk us through like what is Solana company, HSDT, the Nasdaq?
It used to be called Helios. It was an interesting process. To be honest, I mean, as an investment banker, back then, I think UBS was a bulge bracket back in Asia. We don't spend a lot of time doing backdoor listing and looking at SPAC. To us, that's more like riskier. Sometimes some of these transactions can be shady, right? But I guess when you're working, I mean, after being in crypto sector for a while, I mean, we started looking at the sector at 1.7. It took us 3 or 4 years to get comfortable. And then when we get to 2021, I think I was like the person that sort of stopping everyone from going all in until 2021, because I think it was quite early. I ran capital markets for a long time as my career in banking, right? I think it was UBS before I became head of investment banking across Asia. I was running capital markets across the region. And, you see the movie about a lot of times, different sectors, China coming up, and different subsectors of China coming up, internet, right? The last few years, EVs, right? Different sector that went from nobody believed that it could be done. And then there's a sort of Wild West period, right? And then like you have this, 百花齐放 and 百国大战, like people just like fighting each other and killing each other, it goes consolidation, and the winner emerge, right? And then all the speculative and activities whatsoever at the early stage, where if you're not careful, things will explode. You might get exploded together with it. Right? And that's what happened to FTX and all this thing happened in crypto. Early stage, there's a lot of very good opportunities. To be honest, it's very hard for traditional investors to invest in. There's a huge amount of there's not a lot of third-party supervision. There's not a lot of regulatory supervision, and then a lot of people in some early stage company they were not trained properly. They didn't have the kind of experience to run them, and then I think sometimes they also have the kind of corporate governance mindset, right? So we avoided all of it, and by 21 we started getting in. I think we were still focusing on more of the things that we know very well. And I would say that we had the best return across the whole cycle. But I think we probably have we didn't have anything that blew up, right? We didn't step into any of the potholes. If you want to pick something and to run, and something that's very scalable, something is relative to my skill set, right? I mean, you mentioned earlier I did a lot of transactions. And I mean, if you look at the whole life cycle of different companies, you could go very early stage, like before proof of concept, with angel, all the way to different stages, to grow, the late stage, pre-IPO, IPO, and then you go to mature stage, and then you do privatization, bring it back on, and the whole life cycle of this finance, the whole food chain, right? I think the best thing for people like myself, even though some capital do all the way up to the early stage now, from VC all the way to the public markets. We don't do public markets, all the way up to public markets. But again, I think this, because of my experience and with capital markets, I think the whole DAT model works very well for me. Right? I think of this as like a business model is very easy to run. There's a lot of risk, and then the underlying is great. And then only that, what was my role back from 2000 to 2010? I was responsible for bringing a huge amount of capital to an emerging market, China, and the various industry. And to be honest, this is very similar. This is Solana. This is blockchain. There's a lot of new emerging companies that most people don't know. They see there's a lot of potential. They want to know more about it. They need someone they could trust, speak their language, and understand how to operate, explain properly in the amount of time they have with you, so that they could actually start to learn and start to penetrate this new area, right? I mean, like China back then, all the Western funds come over to Asia, and they look at China, want to invest. But if you show them a company in Guangzhou and Dalian,
they're clueless.
They're like clueless. Is there any audit of financial? Well, PRC gap. Yeah, that's a bit hard. And then like it's a lot of you can't find enough third-party information to verify the views they have, right? So they have to start like, okay, PetroChina, China Mobile. Oh, Bank of China, China Construction Bank, something bigger, easier, especially late stage, as you clean up. They have audited financials that go with that, right? And then no one could say they're making wrong decision, because that was based on the level of understanding globally. That's the best you could do, right? Similar to crypto right now. What are you going to invest in? Bitcoin first, Ethereum, and then Solana. People look at BNB, maybe look at Ripple, maybe, and they start looking at hyperliquids. That's interesting. Oh, look, they're just starting. Things that you and your colleagues know very well. To them, it's like 新大陆, new continent they just discovered.
Yeah.
But again, it takes a while. I think if you understand how the major funds and major institutions work, they can't just believe what you said. They need to be able to verify with third party service providers, whether that's a very famous, very detail oriented research analyst and they trust that works for Morgan Stanley, Goldman, or different institutions, or they have to find people like Moody's or S&P that give you a credit rating on this, right? And you have to find reliable media, and you have to find reliable service provider to give you the right kind of data that they can trust, right? And then you're waiting for some of the mainstream third-party service provider in the traditional world to get into this sector and also give similar kind of support as it would in crypto versus in the traditional world. Right? It takes some time. I mean, you have MicroStrategy. You also have some of the mining machine companies that got listed in the past. Recently, you have Circle, Bullish, Figure, and some of these very successful IPOs. And so this have caught a lot of attention. The whole DAT wave from especially in June, July, August also caught a lot of attention on Wall Street. Right? I'm sure every bank on Wall Street right now is thinking about how to initiate coverage on all the different DATs. Right? And then a lot of analysts, they have to learn about crypto, how to get the right kind of data, verifiable data from blockchain, or they have to go and hire someone. This will take a few months, right? I would expect that in the next 6 months or so, you have a very detailed, in-depth coverage of the DATs that are lying. Mm-hmm. And that's why I thought Solana would be great. Because the easiest thing to sell is that, Wall Street is very numbers driven. And for a high-performing blockchain like Solana, what you need to do is put it on paper, compare them to the rest of L1s. Then it becomes the easy sell. I think as time goes along, as more and more people understand blockchain and look at all the L1s, I think Solana will jump out of the page as the investment to make. And I hope a well-run DAT, like Solana company, we are running it to highest corporate governance standard. We are delivering what we told the street we'll deliver. We are very consistent. We're going to be very, very disciplined. And then I hope that we will become the Wall Street standard, and this is the institutional grade DAT to provide access to Solana globally.
Yep, I believe Solana company is definitely on its way. And I'm also pretty curious, why did you structure the deal like this? 500 million PIPE, and at the end closing at 508 million, and then also a 1-to-1 staple warrants, and all these retail registration done and filed pretty earlier than rest of the DATs. What is the principle and what is the conviction behind this?
I think I can't take credit for all of this because I think it's a result of multiple back and forth discussion with my partner from Pantera, especially one of the general partners there, Cosmo. Right? Cosmo was the earliest investor in the DAT space. He backed the very first one that started. When DAT, this whole word was invented in April, he backed the first one, and he looked at a lot of them. He invested in many of them. All the successful ones and some of the failed ones. So he learned along the process. And then I think a lot of the big picture broad concept came from him. And obviously with my banking and financial background, I provide a lot of feedback. And I think we sort of took a balance between performance, aftermarket performance, and also safety. Because the different ways to build that, right? I think we gone through the whole selection process, and DAT obviously can be created using a spec as well. That took a long time. You can't do the kind of playbook that's so successful, deployed by Tom Lee and other DAT. And then I guess you also have this mixed bag kind of DAT where you have a big core business and they buy some crypto and then they stop, they buy and they stop. Sometimes they don't buy again. You have no idea what they do. But our DAT, it was the right design from day one that we don't want it to be. We're very, very consistent. Right from day one, we told people we are launching 500. Right? Even we have more demand that we could launch at a much larger size. To be honest, there was discussion that we should bring it down even smaller. And a smaller DAT, sometimes you have a high multiple. And the logic is very simple because to minimize dilution, you're going to look for a shell, which is like $5-10 million, right? And then the number of free float shares available before all shares are registered is limited. It's only so much liquidity you can generate with this small number of shares available. And then just imagine using liquidity to raise capital against $1 billion versus $300 million. The effect, the accretion effect, is definitely higher with a small shell, right? But again, at the same time, I mean, we want to be qualified as WIXI because it's our playbook. You want to be qualified as WIXI. You do a lot more things, a lot more ATM program, and also you announce a lot of registration to be effective immediately, and you become a lot more flexible. You don't have to wait for SEC. I mean, if we're not a WIXI at the moment, again, with SEC shutdown, we can't do anything. Every time you make a file, you got to wait for them to approve. They're not working.
Given the U.S. government is shut down now.
Correct. So, I mean, being WIXI is important. So, to qualify for WIXI, you need to get $700 million of free float. And then you have to look at, like, out of the whole transactions, which are the shares that are not free float, controlled, for example, by us and by also, invested by Pantera, right? Those two have exclude. And whatever free float means that any shares that's not exceeding 9.99%, and that has to be like $700 million. The shares owned by us and Pantera can be counted in this whole thing. So you have to get to like certain size to make sure safely that even if we go up 2 or 3 times, we can qualify as WIXI, right? And because market is very unpredictable. I mean, as a experienced capital markets and a professional, it's like you can't count on good markets being there all the time. It might look good today. 2 weeks from now, it might be a very different story. So I think we sort of took a balance of being small and not too far off from qualifying WIXI. We decided 500 right now. And then we put a deal together, you want to launch it. And then, funny enough, on the day that we were going out, and then some investors, which are close partners, said, like, I wasn't allocated now, I want more shares. And then so I have this odd number beyond 500. Otherwise, it would be exactly 500, which is fine. I think sometimes to keep some partners happy, we just do them. And we just have to change the wording of on the announcement a bit. But I think that was the right size. And then up to now, I think still think that we make a lot of right decisions along the way. Well designed. And then I think we choose the right shell, the shell that has all the kind of like characteristics we're looking for, the flexibility to issue a lot of shares. We have flexibility to file. And then it was a well-managed process. There wasn't a lot of movement in the share price before we closed. And then we found a very clean shell. And then, I mean, there are a lot of shells out there that have, they do all sorts of things, including canopies and everything else. And not to say that they don't work, but sometimes investors, like when you see some of the riskier business that's sort of in the shell, they might have some concerns. We pick a company that did sort of medical device, but it's still sort of like in, early/late stage of development. Not a lot of revenues, but not a lot of risk. And it's not a product that gets to the inside of the body of patients. And, so the legal risk of the product is low. And it's run by a bunch of very good people, good management. They have a very good board, right? So far, we work very well together. And I guess we live it. I think sometimes working with Pantera, even though we're all very intense, the month leading up to the transactions is a period of time I think I worked the hardest in the last 10 years. But it's exciting.
Getting back to the investment banking life.
Yes, and then you're working with people like-minded people, people that are very logical, very driven, and then very efficient, and then very nice. Good people. This is, even though it's pushing on the limits of my body, but I really love it. And then they work very well together. I think this DAT has a very, very high likelihood. I mean, I'd like to say something like, this is definitely the one, but I guess we are very confident. But I would just say to you and to your audience, that I think highly likely we should become the best DAT for Solana.
Will it be the first DAT to be dual listed in US and Hong Kong?
I loved it for that to happen. I think we are exploring that, looking at the different requirements, and then we might have to restructure the business a bit to come back to Hong Kong and get listed. But again, Hong Kong is our first stop, but we are not ruling out other locations. And like I said, I would become the institutional grade access point for Solana in the public market. I mean, for all the markets globally. We might be listed in more than 2 locations.
Awesome, perfect. So speaking of like being the institutional grade access point for all these like big funds, and you said that you want to be the Berkshire of Solana. How are you going to actually accomplish this? Like through what mechanism?
I think we all love this great man who built Berkshire Hathaway, and over so many years, he's been very, very disciplined, very, very clear about what he's doing. We plan to do the same. We are going to deliver our commitments. We are going to maximize Solana per share, and we will put shareholders' benefits ahead of everything. Right? I think different people have different convictions, but whatever we do, since we're a listed company in the US, we have some of the best institutional investors as shareholders on our register, and then we continue to work very hard and deal with different kind of market conditions. And then whenever we see opportunities, we're going to be very focused to take advantage of it. Whereas market dislocation, we may be very disciplined in doing what we should be doing based on different parameters. When we see value, we're going to go very aggressive. It's Zilla, for example, they started selling Ethereum to buy back shares because it's trading below the NAV, right? And I could fully expect we do the same. Yeah, we don't hesitate to do the right thing.
Then could you also be like maybe investing in some other projects in Solana, let's say DeFi or like other kind of infrastructure projects in Solana?
Going back to the same example, are we maximizing shareholder value? Is it accretive? It may not be accretive in the short term. If it's accretive long term, we will start planting the seed. But for the time being, in the short term, I think what our investors expect us to do is take advantage of the current capital markets and maximize the Solana per share. Accumulation of Solana per share is the most important to us. And then using different instruments, minimizing, take advantage of share premium where there is a premium, and then take advantage of the debt market or different structured products to raise capital in an efficient manner, in a creative manner to our shareholders. We'll take advantage of all these products. I think at the right time, we disclose what we're doing, but can be rest assured, Pantera and us, like every day, we're thinking about what to do. We're talking to the right parties, and then we are, at some point you'll see. I think this is a marathon. A good company takes a few quarters of good execution to prove itself, and I think hopefully with all doing the right thing, with best execution, and we'll win the trust of investors, and they will give us a higher premium, and then we'll continue to build and accumulate our Solana inventory, hopefully before it goes up too fast. That's why we are very focused on raising capital as much as we can in the next half a year, and maximize returns for shareholders.
So looking 3 to 5 years ahead, how do you envision Solana? Like this
I have high hope for Solana. I think for Solana to hit 1,000 is easy, no brainer. Right? I think people say when it's going to hit 500. I think it's going to be less than
during this bull cycle.
Oh, of course. And by the way, I think the bull cycle is changing. I think the crypto cycle and the Wall Street cycle is going to merge in the short term, and then the Wall Street cycle is going to take over for some of the major cryptos. Right? And then if you look at the Wall Street cycle, we just started cutting rates, and they've been in the capital markets long enough. It's always like the inflation comes, the markets become overheated, and then you are hiking interest all the way to the top, and then you get to the point where it started push down, and we just start. Right? So you're basically saying that the bull market has some way to go.
Has just started.
And then quite a few years before it hits a peak again. I think you'll see more rate cuts, and then more money coming back to the market. And then as more money coming back to the market, you'll probably see emerging market currency strengthening in emerging markets. So, equity capital markets will do well. And then you see companies in emerging markets also be able to see better performance in their share prices, raise more capital, when they have more capital, they will grow faster. It becomes a self-reinforcing
Flywheel.
Yeah,
Solana flywheel.
flywheel. Yeah, correct.
So, is there any hidden alpha that you think you want to share to our audience? Solana.
Absolutely. I mean, it's very simple. I mean, the reason we choose Solana because there's a lot of hidden alpha, right? All the ETFs are coming. Institutional ownership of Solana is very, very low versus Ethereum and Bitcoin, right?
Mhm.
And then with ETF, all different ETFs being approved globally as we speak for Solana, I think you're going to see a fast increase in institutional ownership of Solana. And then I think with more DATs being built, to accumulate Solana. Another one just announced 2 days ago to buy a $500 million Solana. Forgot the name of the company. We'll see more of it. So it'll be more and more buying power. And as Solana is doing its job of like attracting more and more new developers coming onto the chain, building up ecosystem, and then all this performance metrics measuring the growth that I could use it very easily to show investors on Wall Street. And I mean, with performing share price that could raise more capital to buy Solana, you could see where I'm getting at. Right? I think this is one way for Solana to go.
Mm-hmm. Still, so the bull cycle, the focus is Solana.
Absolutely. I think after Bitcoin, Ethereum, it's time for Solana.
Time for Solana. Okay. So thank you, Joe. Thank you for being on our show.
Thank you very much.
So guys, this is the first episode of 16AX. I'm your host, Mr. Z, and please stay tuned on Solana Company at 16AX. Thank you.